Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Monday, December 21st, 2020. And our top stories today, the growth of the independent workforce and tax reporting requirements for gig workers. Well, joining me now to discuss this and a lot more is Caroline Bruckner. She's a managing director for the COGOD Tax Policy Statement. Caroline, great to see you. Thanks for joining us this morning.
Absolutely. Happy holidays to you.
You're looking very festive, and we're excited because the Christmas and New Year's are, and hopefully a better 2021 are right on the horizon. But before we get to the holidays, there's a lot going on, and I know you wanted to talk about a recent survey about independent contractors and some of the latest information. I think our audience is going to find this very interesting and helpful.
Well, as you know, one of the areas of my expertise and what my center tracks is how we do independent contract work to fund retirement and what kinds of workers are doing this to supplement their retirement earnings and savings. And MBO Partners is a small firm out in Virginia that does a regular annual survey and has for the last 10 years tracking the almost 40 million people who regularly engage in independent contract work, both as a sole source of income and to earn income on the side. Last week, they released the results of their latest survey, which is a culmination of 10 years worth of survey data that also included in this year questions specifically about the pandemic to track how independent workers are faring during these tough times.
This is, we have seen an influx, as you said, an influx of people. Maybe people have lost their job. Maybe they are doing like a side hustle or a side gig. We've seen more and more Americans kind of move in this direction. So it only makes sense that we find out some of the details and facts. So what can you uncover in the report for us?
So the report is the most comprehensive private sector survey data on this kind of work. And what it shows first and foremost is that baby boomers are continuing to do independent contract work well into their retirement years. And that hasn't changed with the pandemic. What has changed is that Gen Z is moving on to the scene and also doing independent contract work in greater numbers. Now, this makes sense considering the rapid economic contraction that we saw in the spring with the onset of COVID-19. People lost traditional employment jobs. And when that happens, what do? They turn to independent work or side hustles to supplement their income until the job market bounces back. In addition, they projected that 54% of adults will have done or will be working in independent contract work, either as a sole or supplemental source of income by 2025.
So what does this mean, Caroline? When we last had you on the program, we talked about a study that you were doing, and I think it gets released in 2021 about retirement security. I think it was for women. But in general, what does this mean if I become an independent contractor, which essentially I am because I do contracting work for my clients? What does this mean to my retirement preparedness? Do I need to put away more? Do I need to factor that into what I'm doing in terms of saving money?
There are lots of different responsibilities that go into independent contract work when it comes to retirement savings. First and foremost, people that do independent contract work, by definition, typically don't have employer withholding to pay their self-employment tax, which is the equivalent of payroll or the payroll taxes that employees and employers pay. So what that means is that independent contractors, even if they're just doing it a little bit on the side, have to set aside money to pay self-employment tax if they have more than $400 of net earnings. They also have to remember to pay those self-employment tax if they're going to owe more than $1,000 in tax that's not subject to withholding in the form of quarterly estimated payments. Time and again, we see this as a surprise for unwary taxpayers.
Yeah, I mean, can you imagine getting the bill at the end of the year if you were supposed to be putting your quarterlies or putting money away? And I think this is probably, and I want to get your opinion on this is probably the biggest misconception. You think about when you're a small business owner or you're starting your own contracting business, doing side hustle work, and it all comes to you. And in some ways, you have a lot more control. In other ways, you still owe the government money.
It is always a surprise to a significant number of taxpayers who don't regularly have experience doing independent contract work that they owe self-employment tax on their earnings. Because in many cases, especially for those low-wage workers, they might not owe any income taxes on their earnings because they fall below, their overall earnings fall below the standard deduction. But they do, in fact, still owe self-employment tax, which for many of those low-wage workers is their primary retirement savings. It is often a very unwelcome surprise. And going into 2020, the 2021 filing season, it's going to be an even bigger deal because so much of the economic recovery efforts that Congress passed were pushed out through the tax code.
Yeah, so if I was getting stimulus through the CARES Act, if I was part of the payroll protection program as an employee, all those things probably get factored in. And I mean, I can only imagine what the tax filing is going to be like come April of 2021. I mean, there's a lot of things that you're going to need your receipts. You're going to need any 1099s if you took a CARES Act distribution from a qualified retirement plan, right? There's going to be a lot of things that you're going to need. And I know we're going to get to tax tips in the second segment, but I mean, you know, what you brought up just speaks to me that people are going to have to be very, very diligent in keeping records.
Well, and what the MBO Partners Survey tells us is that more and more people were actually doing gig work or independent contract work on the side as a supplemental source of income than any other kind of work that they track. So what that means is that while they saw that the pandemic impacted full-time independent contract workers who had less work, less income over the course of 2020, those that turned to independent contract work as occasional gig workers, that was where they saw an increase of more than 800,000 people doing that kind of work over the course of 2020. So what that means is you're going to have more taxpayers that are going to be surprised when it comes tax time in April of 2021 and are going to have to pay self-employment tax on those earnings.
And you mentioned this, the survey has over 10 years of data. Is 2020 really just a watershed year in that we had all this extraordinary activity? We had the pandemic, we had financial strife and crisis. Do people eventually go away from side hustles, or is this type of economy here to stay? And we should be really thinking that this is going to be a growing part of the economy. People aren't going to go back to corporate work, even if more corporate jobs become available and you're able to, for example, work from home.
So what's really interesting about this 10-year study and the survey results they released this year is that it shows there has been a continual growth towards doing independent contract work for those workers that actually want to work independently and are not what they refer to as reluctant independents, people that lose their full-time traditional employment and are scrambling to make ends meet through doing independent contract work. They have been able to track that more and more people, because either they want flexibility, greater autonomy, or have become digital nomads, are turning to independent contract work willingly and in greater numbers.
Yeah, look, I think it creates a lot of flexibility, gives people that sense of ownership. And as I said, on Saturday with Jen Barrett from Acorns, this is really the American spirit, that entrepreneurial spirit that we traditionally all have that within us to take control of our destiny. Well, Caroline, I want to go to a very quick break, but we're here to talk some taxes. And when we come back, we'll talk about some tax tips and things you should know when getting ready to file your taxes for 2021. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Hi folks, Joe Namath here, and if you're on Medicare, this is important. You're now entitled to eliminate copays and get dental care, dentures, eyeglasses, prescription coverage, in-home aids, unlimited transportation, and home-delivered meals, all at no additional cost. Plus, your zip code may have coverage with the Give Back benefit that adds money back to your Social Security check every month. Look, with the uncertainty of the virus and vaccines, you need to get everything you're entitled to. Here's the bottom line. Call to get significant benefits at no additional cost and see if your zip code has coverage with the Give Back benefit. Millions of people have trusted the Medicare Coverage Helpline. You can too. Call now. It's free.
Call 1-800-924-3920. That's 1-800-924-3920.
Welcome back. We're talking to Caroline Bruckner of the Kogod Tax Policy Center. Caroline, thanks for sticking around with us this morning.
Absolutely. Thanks for having me back.
Well, yeah, absolutely. And look, this is tax preparation, the taxation aspect of our lives, very important. And that survey information, very illustrative of kind of where the economy is going. But, I think we should maybe focus some time on some tax tips. A lot of us are going into 2021, 2020 we're crossing our fingers that things return to some level of normalcy. But one thing that's going to be normal, most definitively, is that we're going to have to file some taxes beginning hopefully probably in April. What can you tell us?
Well, so tax filing this year is going to look very different than it has in past years for a whole bunch of reasons. A lot of the economic stimulus work that Congress funded, both in the CARES Act and that they are putting together with this next round of stimulus right now as we speak, is going to be pumped out through the tax code and reflected on the returns that folks are going to be filing in April of 2021. The forms themselves look different. There is, for example, a new line for folks that take the standard deduction to take a deduction for $300 worth of charitable giving. There are new requirements for reporting whether or not you got a economic recovery stimulus payment back in the spring. And, for folks that, were making claims for unemployment insurance, that income is taxable. And for folks who had never claimed unemployment insurance before, that often comes as a really nasty surprise in the following April.
Yeah, and just to kind of build on what we talked about in the first segment, imagine being going through this strife. You get the economic $1,200 economic stimulus. You maybe take a CARES Act distribution. You have all these other things that are going on, and you start doing a side hustle. That can really add up to a very expensive tax bill, especially if you're doing this for the first time.
Absolutely. And what I've seen in my own research in tracking the tax compliance of gig workers and independent contractors since 2015 is that even the most experienced independent contractors are not always aware of what their tax filing responsibilities are. I did a survey of experienced self-employed workers who were members of the National Association of the Self-Employed, and 60% of them didn't set aside any money for their tax liability. They hadn't even thought about it, and it wasn't something that was a high priority. Other workers are also going to be on the hook for unexpected tax payments that they owe and aren't going to even get any kind of 1099. If you are a gig worker and you work for a platform like Uber or Lyft or even Airbnb or Etsy, there's a good chance, depending on what state you live in, that you might not get a 1099 unless you had 200 transactions and more than $20,000 in payments, which is the filing threshold for getting a 1099K for that kind of work.
So in that instance, I mean, you said anything over 400 I believe in our last segment, correct me if I'm wrong, anything over $400 is taxable. What do you do if you don't get that form at 1099? Are you supposed to keep very detailed records in a spreadsheet on a piece of paper that you can submit to your tax preparer, or if you're filing online through like a Quicken or some other product that you can provide that very detailed information? How do you kind of overcome that?
Well, so the answer to that quite simply is there's an app for that. You have to have done the work and actually done the research ahead of time. But one of the things that we've seen develop in recent years, along with the gig economy, is all sorts of tax compliance solutions for individuals that are doing this kind of work to be able to record their receipts and expenses in real time on an app. Taking pictures of receipts and being able to upload them to keep tracks of your books is something that a lot of really savvy Uber drivers or Lyft drivers and folks that have been doing this for a while have really gotten accustomed to doing in order to claim their benefits to offset their tax liability. But those are only the folks that have the wherewithal that they're actually going to be paying and owe money for their self-employment taxes. So many times, and in fact, the majority of folks that do online platform work don't get any 1099 and don't even realize that they have to pay self-employment tax on that. So they're, underfunding their own retirement security by not paying their self-employment tax.
Yeah, I mean, I can only imagine when things return to some level of normalcy, and there's an audit done. When I say an audit done of not of people, but just in general, that I think, there are people who might be owing some more money in addition. Question for you, given all the challenges this year going into 2021 in terms of tax preparation, would it be right to expect that more people might go to a tax preparer like an H&R Block or use software, maybe if they prepare their own tax return, just to make sure that they have all the I's dotted and T's crossed? I don't want people to, it's really worth the expense if you can avoid some of these issues and, get on the right side of the law and the right side of the tax code.
Well, I think it depends really on whether or not you are a middle or high wage worker versus a low wage worker. And it also depends on how the IRS is able to roll out their voluntary income tax assistance program. I've been a VITA volunteer for the last couple of years, and I'll be doing it again, but trying to figure out how we can help taxpayers who qualify for VITA income tax assistance preparation is, something that I know that local organizations who engage in that kind of work are wrestling with right now. I've heard a couple of public comments by IRS Commissioner Redding that they fully expect the IRS tax filing season to start as planned in mid to late January. But how that looks for VITA programs is going to be something to watch. Now, for folks that are middle or higher wage income earners, they won't qualify for VITA, and they might actually be more inclined to seek tax preparation software or outside assistance in doing their own taxes, given the complexities with the CARES Act just this year.
And I guess last question, Caroline, for this segment. I mean, I have so many of them, and I'm sure people are just writing them down as we're talking. But what about, last year we had a delay in the payment of taxes, right? We had the COVID-19 pandemic, financial strife, many people lost their job, all the things we talked about in segment one. Could we put, and we don't, I'm just asking you to hypothesize here, so I'm not going to hold you to it, but could we see a delay in payment? I mean, given that we don't even have a stimulus package, right, that we're waiting on some additional stimulus. Would it be possible, and I don't want to set unreasonable expectations, but would it be possible that we see a delay in payment again like we did last year, just to get people, or maybe payment in installments to give people a little bit of some breathing room?
I think that with the incoming Biden-Harris administration, they are looking to get folks help as quickly as possible. We've already seen that with them immediately identifying their nominees for various Treasury and other critical economic advisors. I think that they have been, from what I understand and from reading tweets and emails from former colleagues on the Hill, they've been engaged in pushing to get a final stimulus package out. So I think that there's every incentive to try to help people as much as possible. But given where we are with vaccine distribution, given where we are with the state of COVID cases, it's anyone's guess whether or not it will, the current conditions will actually necessitate having to push out that tax filing deadline again.
Well, I think we're just going to have to wait and see. But everybody listen to this show, listen to what Caroline said. Great details, take great notes, take pictures of your receipts, keep them all so you're prepared. Caroline Bruckner, always a pleasure chatting with you. I want to wish you and your family a great holiday, a wonderful new year, and we look forward to chatting with you again in 2021.
Great, thanks so much.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to, then drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, all in one place, check out today's edition of our newsletter, The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.